365 Hawaii, 365 Hawaii, Keller Williams. I am going to be so excited to give you guys one-on-one information about buying a home today. We have an amazing panel here. We have Delania Branham with eXp Realty. We have Travis Green with VIP Mortgage. We've got Amber Haley with Real Broker. These are my partners, and we create an opportunity for people to learn all they can about housing, buying, and selling around Hawaii Island. What we're going to do today, I'm going to give you guys kind of the rundown. Buying a home, the first thing you want to think about is your money. So we're going to start with Travis, because he's a loan broker. And then we're going to go towards how do you go to the next process of finding a realtor, how do you go look for a home, the whole thing. So what we're going to do, we're going to start with the money. So let's talk to Travis about how do you start in your first level of trying to figure out how to buy a home.
Great. Yeah, so I'm Travis Green with VIP Mortgage. The first step in figuring out like what you can do with your money is to speak with someone like me. You want to talk to a loan officer. Traditionally, most people come to a loan officer by way of like a real estate agent referral. And so ask your realtor who they recommend, who you should talk to, right? They've worked with a number of different loan officers and they know who they would and wouldn't refer. So start there. And so call the people that they tell you to call and just say, hey, I was referred by Julie and I want to get pre-approved, right? So that's the first step. And then your loan officer is going to take you through a loan application either over the phone or online. I prefer over the phone because we can just kind of answer questions right there on the spot and give you a really good idea before we're off the phone of what you can probably qualify for, or if you can't qualify at that moment, like what you need to do next, right? So step one is talk to your loan officer and they will kind of take it from there. So you're going to submit a loan application. That's going to be a job history, income, assets, residential history, and pulling your credit, right? So credit's important, job history is important, assets are important, so money in the bank, right? And so once you provide all those pieces to a loan officer, they will be able to pre-qualify you. And so we'll say, here's what you can qualify for: purchase price, down payment, loan amount, and monthly payment, right? Then they'll collect a bunch more information from you as far as income, proof of income, proof of assets, so tax returns, bank statements, pay stubs, things like that. So going from there, there's a lot of loan options that you're going to have, and there's probably a lot of information that you're going to need to get from your loan officer to kind of know where to start, right? So number one is going to be like down payment, right? So it's a common misconception that you need to have 20% down to buy a home. It's not the case. USDA loans and VA loans are 0 down payment loans. Conventional financing for first-time home buyers is a 3% down loan. FHA is a 3.5% down loan. And if you're not a first-time home buyer and you're using conventional financing, the minimum is 5% down. This is all for a primary residence, right? Because we're talking home buying 101. So down payment is one thing. Closing costs are another. Closing costs are going to be like the lender fees, the title and escrow fees, some upfront taxes, upfront insurance, things like that, right? So it's separate and apart from your down payment. It's all paid at closing. But that's a conversation to have with your lender, right? To understand like how much money do I need to have in total, when, like how soon do I need to prove it, and what are acceptable sources for it to come from, right? So your loan officer should be able to take you through those questions and answer them in detail. And that's also going to help the lender understand where your money's coming from, because you want your lender to be able to answer some questions if a listing agent calls, right? And advocate on your behalf and say, look, we verify the down payment. I've already seen it in the bank. They're not borrowing it from somebody. You know, like we already have this verified, right? So provide as much detail as you can to your loan officer. Don't hide things from them. We find it out. It comes up. We don't. Yeah, I am like allergic to surprises. I just get it all out on the table. If there's something that you get through the loan application, you're like, well, this didn't come up. They didn't ask me about it, and I kind of thought it would. Like, just bring it up. Like, we need to know. And so I would just say be extremely forthright with your loan officer. Kind of like when you go to the doctor, like, and they ask you how many drinks do you have in a week, and you like fudge it down a little bit. Like, don't do that. Just like tell, yeah, you round it down a little bit. You're like,
you don't want to know.
Yeah, I don't want them to know how fun I am. So like, we need to know all that stuff. So just like tell us, not how much you drink, but like tell us anything about like, yeah, credit history or, you know, certain events like The most common thing is something will fall off a credit and not report anymore, so they're like, I don't need to tell them about that. And if it's a short sale or something, we absolutely need to know about that, just so that we can react to it and advise you appropriately, right? Like, it might not be a no, it might be a this instead of that. So we want to set you up for success from the beginning.
Okay. Then what happens?
So from there, so the whole...
Because one of the things we talked about is because, when I first started to buy a house, I didn't understand mortgage rates.
Yes.
Right? And then so everyone keeps hearing in the news, oh, rates are going up, rates are going down. But a lot of people don't know that different mortgage companies and different bankers and loan officers have different rates. So how do you discuss that with first-time home buyers?
Yeah, so it's a great question. So there's a lot that goes into your mortgage rate, right? So your credit score, the down payment amount, the property type, and the intended use of the property, primary residence, second home, or investment, all matter, right? So that all factors into your interest rate. And so interest rates do fluctuate from day to day. And so it's important, especially once you're pre-approved and like really looking at homes and trying to make offers, stay in pretty frequent communication with your lender, right? And just, you want to know if rates have improved and maybe that house that was slightly out of reach is within reach now, or it's more comfortable now, or if they've gotten worse, maybe you don't want to go ahead in a certain direction. So stay in frequent communication with your lender. Once you have an accepted offer is really when it's time to focus on like, should we lock in the rate, right? My general advice, especially in a highly volatile environment like we've been in, is if you're comfortable with the numbers as they are presented, right? Like if the payment works and it's not uncomfortable and it all makes sense to you and you understand what you're doing, probably go ahead and lock, right? That's generally my advice. It's impossible to time the market. I've seen people try and it almost never works. And timing the market, I mean, if someone looks at the rates and says, I think the market's going to help me out here. I think it's going to get better, right? It's a risky thing to do, right? You can always do that. That's called floating your rate. You can always do that, and sometimes maybe the market will improve and your rate does get better. Frequently that doesn't happen, and the market punishes you, and your rate is worse. And then you don't like your loan officer, and you're not as stoked to buy a home. So I don't recommend doing that. I recommend like locking it in when you're comfortable. So from that point, you have an accepted offer, you have a locked-in interest rate, everybody's happy. You're going to have a number of things happen, like a home inspection, an appraisal, and maybe some other things depending on where you're buying. But we're going to process the loan, we're going to verify your employment, we are going to probably ask you for some updated documents, most recent pay stub. Always keep us current with your pay stubs and bank statements, right? We always need at least the most recent 2 months of your bank statements and the most recent 30 days of your pay stubs. So keep us current with that. And we're going to verify employment. We're going to continue to verify income and assets. And then once we have an appraisal in, that's when we might get your conditional loan approval before then, but we're going to submit it to underwriting. A human underwriter is going to go through it, make sure that we've done everything appropriately to the guidelines, and then we'll come back and let you know if there's any conditions. Conditions are typically like, finalize your homeowner's insurance, because what we have now is a quote, not a policy. Please write a letter of explanation for, there's a Capital One credit card that went 30 days late in 2019. Can you explain why that happened and why it won't happen anymore? Things like that. A good loan officer, we try to anticipate as much of that as possible so that we don't have a big homework list at that point. But then appraisal will come back, hopefully value matches, we get final loan approval, and then it's really time to schedule the closing at that point.
So that's good.
Yeah.
Okay. Yeah. Because sometimes I don't understand why it takes 45 days to close a loan, and it's they're doing all this homework on it.
Yeah.
And that's why it takes a while. And then sometimes as you get closer and closer to closing the escrow out, that's when all of a sudden they're asking you all these questions, and you have got to get all your stuff in a row to be able to close one. So let's talk, now that we talked about money, let's talk about actually finding a realtor. Now you said find a realtor first to refer you to a loan officer.
That's generally how it works.
Right, but sometimes also when you want to go find the money first, you maybe 2 years before you buy a house,
Sure.
you want to make sure that you can even get a house, right? You got to figure out what all the steps in. So sometimes that's a good idea too, because sometimes people, not just you guys over here too, even when you're thinking, okay, there's a $600,000 or $700,000 house, not even qualified, calling a loan officer first before you talk to a realtor would be a good idea. That way the realtor knows before you get a chance to go into the car that you actually have the money to get in the car. So Talk to
Yes.
us about, okay, so finding a realtor, how do you do that?
And those things kind of happen simultaneously. Sometimes if someone calls me and says, I want to go look at this house, the first thing I'm going to ask is, are you pre-approved? Do you have cash? Because we don't want to waste your time. We don't want to waste anyone's time. So we're going to say, find a lender. Here's who I'll recommend. And sometimes your lender has realtors they work with. So we kind of all get to know each other at the same time. We're your team. In terms of finding a realtor, it is a relationship business. So you're going to spend a lot of time with this person. You're putting a lot of trust in this person. And so it's good to talk to somebody, meet with other people, and see who you connect with, who you feel comfortable with, and who ultimately you want to kind of go on the journey with. So get your loan officer, get your realtor. That's the two people in your team. Your escrow is your third part of your team. And then as you're doing this, you're kind of starting to think about where you want to live. If you're already in Hawaii, maybe you have a place that you know and you have some ideas. If you're just moving here, we're a great resource, your realtor, to help you kind of figure out neighborhoods. There are so many different areas, locations, homes, climate, and things to think about when you're looking for a property here. Is it close to schools? Is it close to work? Is it close to the beach? Can I walk to the store? Do I like cold, rainy weather? Do I want to be hot and sunny? So kind of starting to think about researching neighborhoods, and like I said, your realtor is your best resource for that, because they'll be able to answer questions and point you in different directions and help you sort of narrow in on those fields, because you don't want to waste your time going to look at places that you can't afford or that are 3 hours away from your job, right? So getting your loan officer, getting to know your realtor, committing to that relationship, because it is important to work specifically with one person. Find your neighborhood, and then the next step is house hunting. And then you're starting the process of going and looking at properties. Open houses are a good opportunity if you're out and about looking at open houses, but most often your realtor is going to be the one. Most people nowadays shop online. So I went to Zillow, I went to Realtor.com, here I found this house, and then we'll talk about, okay, this is good for you for this reason or not good for you for that reason. And then we're also, your realtor's working around the clock, looking at new properties, looking at what's upcoming, talking to the realtors and saying, hey, I hear there's a condo coming up tomorrow, let's go hop out and look at it. And so we're kind of your best asset to get you into those properties. And also, once you get into escrow, guiding you on that process and making sure that you get your questions answered, that you have somebody holding your hand the whole time, that you feel supported and knowledgeable, and that you're going into this experience confident, and not feeling lost. Because it's a huge step to make. It's a huge process, a huge purchase. And that reminds me, the most important thing, when you get into escrow, do not make any big purchases.
Right.
Don't open a credit card.
Don't quit your
buy a
job.
car, don't change your job. Just keep your finances static. So that would be my takeaway.
Yeah, that's huge.
Okay, Amber, your thoughts?
Okay,
And,
so
and hit on sitting on people on the listing lot too.
oh yes, okay, so probably along that, what she was saying, when you start to look at property, your realtor will usually also put you on listing alerts with the MLS, which is generally speaking more accurate than Zillow and Trulia and all the places that pull from the MLS. It's just a little bit more up to date.
Okay, what's an MLS?
MLS is the multiple listing service. So glad you asked. So that is where all of the active properties on the market will be. So you can get the most up-to-date information from your realtor. They should be able to send you those in live time as soon as they hit the market, right to your email. They might set you up on a portal. There's different ways you can do that, but your real estate agent can set you up on listing alerts so you have the most up-to-date market information. Okay, so they talked about a lot. I'll just sprinkle in some of my best home buyer 101 little things, little nuggets for you guys. My biggest piece of advice is to use a local lender, not just any lender. I have a lot of clients that relocate from the mainland where they've just never bought a house before, and they're like, oh, but I love this bank, or I've always done this bank, or I've bought with this person before, and they're probably a great lender, but they may not be, or they almost certainly are not familiar with our just the nuances of buying in Hawaii. Our escrow looks a little different. We have different verbiage. The way that we close is different.
Insurance
we have
requirements.
Insurance requirements, lava zones. They were like, lava zones? They've never heard of that stuff, those mainland lenders. So I have had clients not use a local lender before, and the escrow has run into hiccup after hiccup. They were in a different time zone. There are just so many issues. So if you want a better chance of a smooth transaction, use a local lender like this guy right here. Can't emphasize that enough. Also, if you are somebody who can maybe even like easily afford to buy a house here, that doesn't necessarily mean like you can afford any house here in Hawaii. It's another reason why you need to talk to a guy like this. They can qualify you based on what income will work here in this state. Might not be the same as what would work maybe in a different country or on the mainland. But we also have things unique like lava zones, right? I mean, you can't give anybody a loan in any lava zone for any reason. We have very, very specialized things here on Big Island. So before you even go looking for a house, you might not realize that you couldn't buy in lava zone 1 and 2. So why are you looking at those properties online? You don't know that until you have those conversations with your lender. There's even properties in my market that if you're getting one of those cool USDA loans that he was talking about, it doesn't qualify for maybe that loan program because it's not in the right geographic area, or you will have a VA loan, but this specific subdivision in this remote part of East Hawaii doesn't have a road maintenance agreement, so you cannot get a VA loan there. So certain things like
or
that.
Or the catchment like isn't up to code or whatever.
Yes. So there are just very unique things about property here. So we want to get these conversations over with at the beginning, so you're not wasting your time falling in love with houses that you can't buy because you didn't know about a road maintenance agreement with your loan program. Let's find out what you qualify for in Hawaii with that loan program, probably before we even set you up on listing agreements. So that's another big piece of advice. Let's see, what else? Our escrows probably look different than if you're coming from somewhere else you've never bought before. They kind of already mentioned a typical escrow here is, I'll say 45 to 60 days. You guys agree with that?
What does an escrow company do?
What is an escrow? That's a great question. So the escrow company, title and escrow company, they're a neutral third party that once you have an accepted offer, we call it opening escrow, and they're the ones that are going to make sure the buyer and the seller execute on their contractual obligations. That's where all the funds are going to go through. So a lot of people are confused, like, what is escrow? What is this escrow thing? It's this time period from when you have an accepted contract to when all of the different things, all the different moving pieces need to happen, the inspection, the loan, all the different things before closing day, when you get the keys and you can move in. And Delania, don't you think closing here is probably different than most other places? So
and some lenders don't realize that on the mainland, and it messes up your time frames. We have a weird 3 business day recording period from the time you sign, when you would normally get your keys, and the time when you actually get your keys. So
It's during that time frame is when the money is being transferred in, right? And you want to make sure that the money shows up at the bank.
And then there's also just like a day in between that just like nothing happens.
Everything goes to the Bureau of Conveyance in Oahu and gets officially recorded. So that's what we're waiting for.
That's really unique here. So if you're a first-time home buyer in Hawaii, our escrow timeline is, a little bit different, and these are just good things to kind of be aware of, and another good reason, to use a local lender because they know these things. So our closing day, whatever you visualize in your mind, I find most of my kind of newbie buyers, they think we're just like all sitting at a table and we sign and you get the keys and it all happens together all at once. But usually it's like the seller signs on their end, the buyer signs on their end, and then we have a couple business days in between where everything's signed and then fully funded. And then we finally record, and then usually between 8 a.m. and 9 a.m. your realtor and you might get a phone call saying, congratulations, we've recorded, the Bureau of Conveyances, then you own the house. Not before, it's not at signing like maybe in another state. So that's unique and just kind of something to be aware of. You don't get the keys when you sign, so make sure you're aware of that. It's going to be a little bit later in Hawaii.
Yeah, the closing date in your contract means the possession date, not the signing date.
Right, and that's for those of you who might be first-time home buyers, like you said, in Hawaii, maybe not even just first-time home buyers, that sometimes people, they book their flights, and they think they're moving into their house when they sign those deals. And then they get here and they say, what? I have no place to live because my house isn't really my house yet.
Yes.
And so that's another key point about trying to time it to the time. So make sure you talk to your realtor about that.
Yeah, timing can be hard, and nothing is set in stone with a real estate transaction. Even if we do everything quote unquote right, things can come up. So you want to have like a backup plan. You don't want to have like a certain date you have to be in that house and all your stuff's arriving that day because there could be some unforeseen thing in the 11th hour that delays it. You also might be able to close early if all parties agree and the loan is processed and all of that. So yeah, it's kind of a fluid thing.
It is. And another quirk I will say about Hawaii closings in particular is like your closing funds, right? So like in most places, you can show up, you can send a wire, you can show up with a cashier's check or something like that. As long as it's certified funds, it's acceptable, right? So here, it's a wire or a certified check drawn from a bank in the state of Hawaii, right? So if you show up with a certified check or a cashier's check from your credit union in Oregon, even though it's certified funds from that bank, they will place a hold on that and it'll delay funding and reporting, right? So you must communicate clearly with your loan officer, your real estate agent, and your escrow officer to understand like what are my exact funds due, when, and what are the acceptable methods of me transmitting these funds.
Right. People have gotten stuck on that. In fact, when I wrote this book, How to Move to Kona, we were talking about the fact that sometimes people, they come over here and they get so excited they want to buy a house, and then they say, okay, where's your check to pay for this? And they didn't bring their checkbook with them, and they have no access to their funds to even get the down payment. Because that's the thing, too. Tell them about the fee that you have to pay. The $10,000 earnest money.
Oh yeah.
Talk a little bit about earnest money.
Yeah. So earnest money. Yeah. So basically, when you in your purchase transaction, you have your down payment and your closing costs, right? So all of this is like your total cash due for the transaction. That's most of it. You're going to pay when you sign, right? You're going to send that to the title company, and I just like to present that as like a cash due at closing, right? One amount. And so when you have an accepted offer, though, you have earnest money. And so earnest money it's a show of good faith, and it's a check basically that you write and take to the title company that is held by the title company. They deposit it, but it's held in escrow until closing, but it's applied towards that total amount due at closing, right? So let's say your total amount due for the transaction is $100,000, then you have $10,000 in earnest money. You're going to pay $10,000 to the title company up front after your offer is accepted, and then you're going to wire $90,000 for closing.
And then they use that money in case you don't perform on the contract to scare you, to keep you in contract.
But if your realtor is doing their job and you cancel within your contingencies, it's refundable. So it's not,
Right.
Some states you put a deposit down and it's non-refundable. Here it is a refundable deposit as long as you are following the contract timelines and dates and so on and so forth. So yeah.
Right. And one thing I learned since I got my license recently is that you think of realtors as showing you houses and being all fun with the whole open house thing, except they are project managers. That's really
Yes.
what a realtor is that they make sure that once you get into escrow, that they're the ones who are calling the termite guy. Did he show up? Is he giving you the information? Are you? So it's kind of like they help you step through step the whole thing, and it's their responsibility to make sure that you keep up with the timelines that are shown in the contract. Because if you have like 3 days to do this, you have 4 days to do that, you got 5 days to do that, and if you're not on top of all of that, that's when you might actually lose your earnest money.
Yeah.
So making sure that you have an agent that you completely trust, communication all the time open. Because
Yes.
if your realtor goes dark on you, you might be losing opportunities that you didn't even know in the whole concept of having the house, right?
Or if you think I'm just gonna go it on my own, right? Like I don't need an agent. I'm just gonna approach this listing agent seems nice, right? Well, that listing agent has an obligation to like represent the best interest of their seller, right? So you wouldn't represent yourself in court, right? Most people. I always stress to buyers that come to me first. Like if they don't have an agent, I always stress to them that they call one of these people, interview them, get to know them, figure out who you're comfortable with, and work with them. It's very important.
And also, a lot of people in the country don't realize that working with a buyer's agent, you don't pay them. They get paid at the end of escrow from the seller's agent. So it's not like you're trying to play realtors against each other who's going to be like more like less expensive. It's all like they get their paid at the end. So when a listing agent says, come on in, I'll double end the deal, then they get double end of the price, but you only get half of what they should be offering you in terms of services, right? So, essentially. So make sure that, having a buyer's agent is one of the best ways to protect yourself and get the best representation in a contract and being, just having it just done the best way possible, right? Also, with first-time home buyers, when they are thinking about, hey, what's it really going to take to get into a home? Can you tell them a little bit about the home inspection process?
Do you want to take that one, Amber?
Sure. Yeah, so when you guys may have heard us use the word contingencies a lot. So there's different contingencies in the contract, and then once they're released, then, we move on and all of that. So probably the biggest one is what you'll hear a lot of agents refer to as J1 home inspection. It's J1 contingency. So generally, the home inspection period will be 14 days after the purchase contract has been accepted. That's what it usually is. And that is your time to do all of your due diligence as a buyer. So I recommend to all of my buyers that at minimum they get a general home inspection by a licensed local home inspector. Most of them have no idea who to call for that, so a good real estate agent will have a handy dandy list. They can probably get that scheduled for you, and you'll usually pay for that outside of escrow. On the Big Island, they run just completely depending on the property, but an average property in my market, maybe $475 to $650 for a home inspection. So that's something you'll kind of want to budget for. Some people are like, do I really need that? Like, that could buy part of my new couch. This is a huge purchase, a huge investment. Yes, get a home inspection. Highly, highly recommend it. Based on that home inspection or just based on the property or your comfort level, you might want to get other types of inspections as well. But your inspection period is that time to do all that due diligence where you can, if something comes up during that inspection period that you're like, wow, I wouldn't have made an offer on this house. I don't want to buy it now. That is your time to do that and get your earnest money back. So it's really important. It's like the most important probably contingency to pay attention to. You want to know when that expires. Sometimes things will come up and you will be able to negotiate with the seller, like maybe negotiate for a little bit of credits or repairs or come to some kind of agreement if there is stuff that comes up. That kind of depends on what the market looks like too, how much negotiating power you have. But that's a big one, the home inspection period. Probably the second biggest for most people is the financing contingency. And that there's a lot that goes into getting a mortgage, as this guy knows. So I have a lot of first-time home buyers who find that process to be quite overwhelming. They're like, wow, the lender is asking for so much info. Yeah, it's because it takes a lot to get a mortgage. You're doing it right. So yeah, those are the big ones.
Yeah, beware the people from like 2005 that would just say, here, just sign here, don't worry about it.
No. There's a reason. It takes a lot to get a mortgage.
Intense.
So yeah.
So in terms of so the purchase contract is something that realtors will go over with you. There are 6, I can't remember how many pages, 13 pages, something crazy.
15 now,
15
yeah.
pages.
Right, every year.
Right. And so one of the things that I've seen some of my realtor friends do, and I'm starting to do too, is going through the purchase contract before you actually have to buy a house.
Yeah.
That way you know everything is in the purchase contract, especially if you find something that house might go pretty quickly. You don't have a lot of time sometimes to start asking questions about how this house is. Go through it first. Talk to your realtor about what does this mean. Like we just talked about J1, that's a section of the purchase contract that talks about inspections. So by going through that first, which takes about an hour or so, and understanding all of it, it makes you, when you find the house of your dreams, it actually makes it happen faster. I was working with a mortgage guy one time, and he said renters usually have a net worth of $5,000, and that's enough to pay for your funeral expenses. Where people who own homes have thousands and thousands of extra dollars because they invested in the house, and it's the single biggest way to build wealth in America today. So I know that we're talking about sometimes scary rates and the housing prices going up, but there's some house in East Hawaii probably that somehow you can probably figure out how to afford, especially when you don't think you have to bring 20% to the plate. That talking to a mortgage person actually gives you reality checks on what you actually can afford, and then start working and looking around for different things. And what we did talk about though was the unpermitted homes. There's
so much stuff.
Yeah, I had a guy call me the other day. He said, I have a $135,000 house in Miloli'i. What's wrong with it? I'm like, well, it's a shack in Miloli'i to start with. And so being able to understand that sometimes you can't get a loan when a house is unpermitted, even though it might be really inexpensive, or sometimes you're sitting in a risky lava zone, it might be difficult to get a loan. So knowing all these different things is usually on the back of a realtor who understands their neighborhood.
Yeah. Just to just one little nugget, because I work in a market where there's some really, really affordable real estate for Hawaii, and people who are not familiar with Hawaii real estate are like, oh my gosh. If a price looks too good to be true, there's usually a reason. So it's usually that property is completely lacking county permits, or in a very risky lava zone, or there's something else going on there. So if it seems too good to be true, just like everything else in life, it probably is. Right. So have a realtor. I have a lot of clients. They they know when they see stuff like that, now they'll just send me that number and they'll be like, what's the deal with this one? Show me what are the red flags, and I can take a pretty quick glance at it and be like, well, this is why it has this price tag right now.
And then also, because Delania and I actually have done a video about buying condos in Hawaii, and we had, I don't know, 15,000 people look at it. So that way, people are definitely looking at condos as an affordable way to get into the market in Hawaii, right? But understanding what you're getting yourself into with owning a condo, and understanding HOA fees and everything else, just like give like a 30,000 view of what first-time home buyers should know about buying a condo.
The fees are expensive, especially if you're used to mainland HOA fees. Our mid-range is probably $800 a month. The lowest, I think right now you can get is around $400 a month. They can go up to $2,000 a month. So you have your HOA fees on top of your mortgage fees. Not everything is financeable, especially if you're wanting to do USDA or a VA or an FHA. You can't qualify every building. And then we have leasehold fees here as well on some leasehold condos. So it's an additional fee, an additional issue with financing, and a whole nother realm of purchasing. So condos are a good option, but it's not for everyone, and it's something to definitely explore, with your realtor and think about your lifestyle, your needs, your budget, and what that looks like for you.
Right, like Delania said, that some people, because we talked about this too, is that if you own a single family home, landscaping, home maintenance, all the stuff.
Sometimes it balances
Yeah, because
out.
sometimes condos will pay for the insurance, pay for cable, pay for security, everything. So that sometimes you have to weigh the two, paying it for yourself or being forced to pay it through an HOA.
And especially if you're not wanting to be here full time, for some people it's a first step. They're here part of the year so they can lock up their condo and leave, and then when they retire, maybe they'll sell the condo and buy a small home or something like that. So there's, it can be a step for some people towards a different long-term plan.
Yeah, because sometimes buying a condo for a few years and keeping it, and then buying a house, and then
having
using the
a rental,
condo as an investment piece. It's it's wealth management. So yeah. Do you have any questions?
The question is are there certain banks or credit unions that are like better than others to sign up with here to like establish kind of like a banking relationship before starting the process? I would say I wouldn't worry about it. Like my company, VIP Mortgage, we're what's called an independent mortgage bank or a direct lender. So we're not a bank. But we do everything in house, right? So we do the whole loan start to finish in house. We have the ability to broker loans to certain local banks if need be, like if it's like a condotel, like a short-term vacation rental type of project. Those typically will broker to like a First Hawaiian Bank or Bank of Hawaii. But I would just say that in terms of like qualifying for a mortgage, my recommendation is like don't make any banking changes until you have spoken with a loan officer. So like if you
So you want to have money in a local bank?
Oh, got it.
So the question is, the person said that their bank is in California, and we're talking about making sure your money
Opening
is
an
here.
account
Sure,
here,
sure.
yeah. And you want to open an account here. It's kind of subjective. Some people do like credit unions. Some people are like, I love Bank of Hawaii. I love HSC. There's actually a couple of banks here you could talk to.
Yep.
Whoever has the best rates and best programs, there's not one that I would put above another. It's just what works best for you. Yeah. But it is good. Sooner than later to establish online banking. You don't want to make massive changes to your finances,
Right.
to have something locally that you can move money to.
I'm sorry. It's just like, so for instance, like if your bank is in California, right, and that's where your down payment's coming from, right? It's very easy for us to get a 2-month, like your 2 most recent bank statements from that account and source those funds. Your lender has to see where your funds are coming from and trace them from 60 days ago to closing, right? So, and you're probably going to send a wire. So most banks will allow you to do that remotely. I know that, like, I believe Wells Fargo will not. I think you have to go there in person and request that wire. So I would say talk to your bank and understand what their wire policy is. But if you leave it at least until closing, like in your existing bank, and you wire from them, very easy for the lender to source that and track that money. Whereas and we can still do it if you open a new account here, but then we're sourcing 2 accounts. It's just more work for you, really. Yeah. But that's fine.
And then seasoning money. There's something about seasoning money.
So the question is like, what is seasoning money?
So basically, you have to, like, it has to be sitting in some place long enough for it to count or something.
Yeah, like you were just saying, like having a record, having a history.
So we look at, we do a 2-month look back. And so what that means is like, if there are unusually large deposits in that 2 months, right? And what I mean by unusually large are like, we can't tie it back to your payroll or like other normal banking activity. We have to source those deposits, right? And so that becomes like a thread that we start pulling at. And so we might go several months back to figure out source of funds or pull in other accounts that you didn't really want to share with us. So that's what we're looking at, is the activity in the most recent 60 days.
The realtor gets paid by.
So sellers pay to list their home. They pay a commission, and we have a brokerage agreement. So that the brokerage is actually own the listing, not the realtors. So the brokerage I work for, if I list a property, they have a contract with the seller to pay a certain commission amount, and then I have an agreement with a buyer's representation that comes in, and so I agree to split that commission both ways. So the seller pays everything, and it's split between the agents. So sometimes if there's not a buyer's agent, if a listing agent is working by themselves, then they're keeping all of that commission. That's what she was talking about, double ending. Sometimes listing agents, there's no other representation, but technically it's the seller that pays those fees.
Average mortgage rates. Yeah, so I mean, I have to paint with a really broad brush, right? Because there's a lot of required disclosures, but broadly speaking, on a 30-year fixed conventional right now, you're going to see somewhere in the low to mid sixes for most people. So like 6.25 to 6.5, somewhere in there. And that is good credit, right? So 740 or higher. That's a primary residence, single family home, 20% down. Broadly speaking.
And that's not terrible.
Right.
It's not terrible.
It's not terrible.
Thanksgiving, it was like 7.25.
Yeah.
It was very uncomfortable to tell people that.
Doing research, you cannot do enough research, really, because knowing all these different aspects of buying a home, it can be very confusing. And understanding what you're getting yourself into, understanding monthly payments so you don't lose your house, is really important. So make sure that you have someone that you can trust, get your finances in order, make sure you find a good realtor, make sure that you find places that you want to live that you can afford in, and good luck. And so thank you guys all for helping us educate home buyers today.
Yeah, thank you.
Aloha!